as Tim likes to say, a lot of money can be made when things improve from terrible to bad. So let's take a look at Boeing, down by more than 30% this year, although the stock has improved relatively recently. Our next guest thinks it is primed for a comeback with improving technical momentum and renewed operational optimism. Joining us now is Tony Zhang, chief strategist at OptionsPlay. So, Tony, what are you seeing in the charts, and how would you play it?
Yeah, first thing you see in the charts is the fact that Boeing, after the past 3 or 4 months, have really struggled to kind of form that bottom. It really has started to show some improvement technicals. We broke out above that 170 level, which was the key resistance level that it's been struggling to get above. But more importantly, over the last couple of weeks, we actually got past the 200-day moving average. And what's really interesting is on Wednesday's volatility, you saw Boeing didn't move at all. This really speaks to the strength that we started to see here from investors for this particular stock. And if you look at just the business, you know, the CEO has gotten past some really interesting milestones, gotten past a major labor dispute. You've got some funding now, and I think right now, the hands down, the CEO's getting their hands in dirty and working towards improving the backlogs with both 737 and 787 programs, continuing to get higher deliveries month after month. And that's really kind of what we're looking for, and onto the road for recovery for Boeing.
How are you thinking about just setting targets, or exactly how much of its many years worth of underperformance we might expect to get back soon?
Yeah, it's hard to say. You know, that's really kind of the speculative nature of this particular stock. But this is really kind of where I think this is very early days. And I think for a lot of investors, the risk reward is actually far more favorable right now. But there's no doubt that this is still fairly risky and very early in the recovery game as to whether or not they can continue to show some of the momentum that they've shown over the last couple of months.
Hey, Tony, it's Tim. So going back to the charts and where you see both levels we think the stock can rally from. It certainly had a nice rally in the last few weeks off of a horrendous 2024. But the dynamic for me is this is a cash flow story. This is a reversal of cash flow. In other words, negative cash flow, 10 to 12 billion, has the potential to be possibly plus 10 to 12 billion by 26. Where do you think the stock begins to incorporate some of those moves? And I mean, really even levels on the stock that you think investors should watch.
Yeah, the 200-day moving average is by far the most important one, I think, right now. We just cleared above that level last week. We really need to see that hold. We want to see the 200-day moving average continue to curl up, and for the stock to continue to hold those levels. That would be the most important one, I think, for investors in the long run to keep an eye out on.
I've been interested in kind of the sentiment swings on Boeing. When they first had their issues, management, production, obviously, 737 MAX, you saw the street wanting to defend it, and then they kind of, I think, capitulated and more or less turned net negative. What are you seeing in terms of positioning and expectations embedded in the market and options activity, things like that?
Yeah, so we're starting to see some bullish activity here for Boeing in the options market. But like I said, still very early days. We're not seeing a ton of volume right now, but I think this is really where an opportunity for investors early on to be able to try to get into what could be a long-term recovery for Boeing. You know, right now, the way that I think we should play this utilizing options is to still take advantage of the fact that implied volatility on Boeing options are still quite expensive. And you can take advantage of that by selling options. So I'm going out to the January expiration. I'm looking at selling the 170 puts. Earlier today, you can collect about $4.30 by selling those 170 puts. And this basically obligates you to buy the stock if the stock's below 170 at January expiration, which is just below that 200-day moving average. And you'd be buying Boeing at that breakout level. So even prior to the breakout level that we're referring to. And that's really kind of where I feel most comfortable buying this. Right now, we're trading at about 1.4 times sales. That's by far the cheapest of any aerospace company at the moment here in the S&P 500. And that's what I like is the low valuation. We're starting to pay attention to this from a technical perspective. Yeah. The risks are there, and I want to reduce my risk by selling some puts here.
Right. So you collect some cash on the way to perhaps buying the dip. Tony, appreciate the time today. Thank you.